Hello? Are you there? Cody's losing his mind, man. What is going on with this thing today? I think it is all good, man. Welcome to the closing beat. It may be us, maybe you too. We noticed it took a while for it to say, hey, go live. So maybe something going on today. The weather here sucks, so I can blame it on that if you'd like me to do that. It's like cloudy and rainy every day. This is Florida, and it's just cloudy and rainy every day. Hey, we're financial advisors, so we work inside. We don't work outside. Thank you for watching and putting up with us here today. While other advisors are playing checkers, we play chess over here, so hopefully you'll come check us out. My example today was a client that is taking advantage of the EV tax credit, specifically how to do it. They thought they weren't going to get it. I'm like, no, you're going to get it. This is how we're going to do it. And so specific strategies to help them make sure they get the $7,500 credit, which if they're giving it out, I'm going to help you figure out how to get it. So that is that. All right, let's get started here today and stop messing around. We got a good amount of data to share with you. Okay, so we're going to go through a couple things because if you happen to look, I don't know, you're living under a rock or something, you notice that the stock market's had a really impressive rally here. And today, okay, it was okay. You know, basically a little positive day. It was a lot better. But all of a sudden, we lost a little bit of a steam there. We have now seen a rally of over 10% off of low, well, about 10% off of the lows there just in the last few weeks. That means the S&P is back to being up 17% year to date. Now, this is interesting. Whoa. Okay, I'm going to get rid of that. And we're going to put back the other thing because what's happening is we are now, if you look at the chart, we've got a ways to go. How far do we have until we hit highs? So we'll kind of go over here and just trick it so I can see 3 or 4%, right? We are less than 2% now after today from hitting new all-time highs on a total return basis. Why would we look at that? What does that even matter? Well, someone that's investing for the long term is getting that dividend. It's not much, but they're getting that dividend there. And so their total return beats the person, presumably, that's in and out over time and doesn't get to have the dividend. So whenever somebody says total return, like your maybe Verizon's down 2% this year or whatever, but total return is positive because they paid a dividend, right? So that's what we're talking about when we say total return. Now, if we take the S&P and we say, let's, on a total return basis, let's look at pullbacks off of highs. Where do we stand? We've got now less than 3% until we get back to technically hitting all-time highs. That would happen before the stock market visually showed a move to all-time highs if we're looking at it on a price basis. So the first cool thing here is this is obviously something it hasn't happened yet, right? But it's something we can look into there. Now, we have been off of those all-time highs. In other words, in some form of a pullback or consolidation. We've been in that about 500 days. It's a little less than 500 days, okay? So, excuse me. So we hit all-time highs on a total return basis, you know, and then we had the 2022 thing and the markets were down a little bit and we've been working our way back this year. Anyways, 500 days goes by just about. There's only 10 other times in history where the S&P 500 has remained off of, or in other words, hasn't made all-time highs in that time period. What does that tell you? That's kind of an interesting thing there. Think about that for a second. If you're a long-term investor, the stock market, aside from 2006, which is where we started hitting an all-time high and then pulled back, and then during COVID, right? So we had the same thing there. But aside from some outliers where the stock market remained off of all-time highs for an extended period of time, it is not normal for the stock market to be under all-time highs for 500 days. That's really not a lot of days in the long term if you think about it. If you're just kind of putting money in your 401k or whatever. So this is a bit odd for the market to be down for so long. And now, granted, we haven't fallen much compared to other pullbacks, but think about that for a second if you're a long-term investor. If you have the worst timing ever, I don't know, I'm just going to pretend this is the high. It's not, but I'm going to pretend this is the high. And for whatever reason, this is the high in the market before it has its ultimate pullback. And you pick the day before, right? You have like a really horrible timing. It would be uncommon for you to have to wait talking about the S&P, to have to wait 500 days to be above where you started, right? And that's, by the way, over the lifespan of the stock market. So there's all kinds of craziness. We thought the world was going to end numerous times. Oh, man, that's crazy. So we stand at the same point where what we can say is this is actually a little bit abnormal. We've spent longer down here than we should have here. So I just thought that was interesting, something to point out. Now, let's pretend, because this very well could be the case. Again, I don't think the stock market goes boop all the way to these new all-time highs in this fell swoop, right? This big move. It's not. I would bet you a box of cornflakes it's just not going to happen, right? So I'm from Texas. I can say things like that. So what happens if we chop around and then do make all-time highs? Let's just pretend. Let's pretend we're already there. Okay. So when the stock market makes a new all-time high, the S&P, is it normal to say the coast is clear? Do we get good returns from there? Does it normally just the momentum keep going? Well, let's take a look. Okay, we're not going to do the average. We're going to do the actual ones here. So here is the last 10 times the stock market spent time away from all-time highs. And then we said, okay, when it got there, what happened afterwards for the next 1 month? And you get why I'm doing this. I'm not saying to be a short-term sort of investor when these things happen. I'm saying I just want to know, did the momentum continue or did it stop? Was this the end of the game? So 2012, you notice there's only a couple where once we made an all-time high, the market fell, and within a month's period. For the most part, actually, if you average that out, it's a positive return. So the average response to the stock market hitting a new all-time high in a 1 month period that follows is to just keep going, not necessarily by a whole lot, but to just keep going. So, well, let's zoom out. Let's go 3 months. As you zoom out, okay, the positive returns get a little bit stronger because it's had more time to grow. But it's actually not common for the stock market to hit a new all-time high and then crater or fall apart in any meaningful way. You have a 3% pullback and a 1% pullback after hitting an all-time high. So if you go look at like April 2012, yay, all-time high, and then, oh, we fell a little bit. Not much. We can handle that. That's just a couple days in a real volatile market. So really, really cool. What the moral of the story is that if we do hit a new all-time high, the momentum stays with it. You know, maybe not as fast or anything, but the momentum tends to stay with the market. In other words, momentum is the theme, right? Ride the trend. The trend's your friend in that case. I personally would like to see we hit all-time highs and it spooks everybody for a second. Maybe there's some profit taking or whatever, but you know, I can't always get what I want. All right, the NASDAQ, let's take a look here. So this is very curious in my opinion. The NASDAQ up 10%, over 10% in 10 days. What I want to know, since we're right here, see what happened today? We come up and hit a prior area that people know there was a fair amount of selling at that point. So we're here. All I want to know, hey, 10% in 10 days, is it normal to pull back, go sideways? What can I expect, right? Because as a longer-term investor, I just want to know, am I on the cusp of putting money to work, or am I going to have to wait for a little bit? So we're going to have just a little bit of fun here. I'm going to go into our research site. I'm going to use the cues so you can play along if you want. Greater than 10% in 10 days, and I'll just put 30 years. And what I'm curious about here, I'm going to go to the forward, take that data, go forward, and we'll just, short term, right? Let's get rid of the stuff. We did the S&P yesterday. Let's go like this. All right. So, okay, interesting. So the NASDAQ, when it hits 10% or more in 10 days, the next 1 week tends to be a little bit choppy. It's tough to guess. That's all I want to know. Is it a clear momentum type trade? Is it a clear pullback and, sit and wait? Or is it kind of choppy? And in this case, you got a 50% chance that the NASDAQ will be higher in that next week. I don't like 50%, Over the next month, you have a 48% chance it'll be higher. And if so, average gain 1.39, median is actually a loss thanks to some declines there. So you have less odds. What that tells you is maybe you missed it. Maybe you had some of your portfolio in NASDAQ or tech stocks or whatever. Congratulations, you had a nice run. Now we don't expect it to continue, right? You don't sit there and go, come on, something's wrong. Why is it not giving me another 10% in 10 days? Now you know that it's very normal. It's just, hey, man, let's take a break. Let's just go sit down, relax. You know what I mean? So if you see that, that's not odd. That's totally normal, right? It's the kind of fun things that I like to talk about and point out to you, because a lot of times doing the right thing is just resetting your emotion, realizing that what you have gotten used to, oh my God, this is fun. Every day is up. I can do this. This is a great thing. Oh, the stock market's a wonderful place, right? If you get used to that and then it stops, you go, oh no, something's wrong. I'm going to sell. When in reality, nothing's wrong. It just does what it's normally does after having such a strong run. All right, quick little run around over here. You got the Russell. This is pretty fun. It went from being down 5% year to date to up 4% year to date. Really, look at yesterday. I mean, that's like your bam. Like people believe in that. That's the W in Jazz Wealth. See it? That's a higher low. So I jokingly say it's a W from our logo, but you get the gist of it, right? Quick move, quick snapback rally. Oh, you mean Russell? Small caps are worthwhile? Okay, in a big way, and people went for it. Now you do the same thing. Do I expect this monstrous rally off of lows to replicate itself again? No, probably not. And you could probably look it up if you like there, but that's pretty cool. Okay, one last thing here. If we go back to the S&P, what did we have yesterday? We had a monster day. SPY, I think it was 1.94% or something. That is not normal. We can very clearly see there are not many of those days on the chart. Well, what'd you think about today? Did you look at today and think, come on, giddy up. What's the matter with you? Let's get going, right? If you did, let me show you something here. I don't even know. I'm just going to do this. I don't actually know. I'm going to go back to our search. I'm going to do SPY. I'm going to go greater than 1.5% because I'm going to bet that if that happens in one day, the next day doesn't do a whole lot. I'm going to bet here. So all I did is I said, show me every day, which is 500. That's a lot more than I thought. Well, 35 years, 516 times. The S&P has gained more than 1.5% in one day over the last 35 years. What I'm interested in is this right here. You can see it. Okay, good. So this is showing you the next day. So in other words, if you select one day, it's going to show you the forward stats for one day. If you select 1 week, then it's going to give you 1 week. You can use the other tool to try other scenarios. But what we're looking at here is the average return on a day following a move of 1.5% or more. So what we had yesterday is negative 0.08. All right, we did a little better today, right? It was a little better. We were positive at least. It's essentially a 50-50 shot. Look at the median return. Look at the probability of being positive. Look at what happened today. Nothing fancy. And that's okay because now we know that's just what happens. That is a big undertaking to have on one particular day. The next day is like, well, let's just take a second here. Let's figure out what's going on. It's that back and forth mentality. So I really want to drive that point home because unfortunately, where we stand now, we have overpriced or front-loaded, you could say, rate cuts. Everybody now thinks rate cuts are happening sooner. No, they're not. They're not going to happen any sooner, right? It's just the data has caused people to buy and go, oh, great, rates are going to be lower sooner, which means tech companies will make more, which means the real estate companies will be able to get back to work, and that means they're going to make a profit. Therefore, they're worth more. No. It's just people getting excited, right? So careful on that one. Speaking of real estate, price drops on all active listings now at 6.9%. So 6.9% of all homes that are active have dropped their price at least once there. Before COVID, it was 3.5. And that's what we use as a benchmark because during COVID was what was going on. Median prices are still at 4%, so don't feel bad about that. And I pulled one other data source. 37% of all homes that are on the market come off the market within 2 weeks. So still a pretty hot little market there. That's not my data. That's Realtor.com. Let's go to stocks in the news today, and then I'll take your questions if you have any. I'm sure you saw Target, right? Target beat earnings by a bit like 50%, like a lot. It was just a big number. So that's the start of this excitement here. Store sales were down 4.9%. And you think, well, that doesn't sound good. Why is it up like 17%? That's because we were expecting the store sales to be down more. So they still saw increased traffic coming through, just, it wasn't as bad as everybody projected, and not increased traffic. They saw less traffic, but it wasn't as bad as they had predicted. The cool part, and I think what's helping here, is their margins expanded. What's going on? Remember how we were showing that companies that can increase their margin with less traffic or less sales, whatever, they're being rewarded, right? They're able to price on a lot of that pricing power is, I guess, the word you'd use. Inventory lower as well. That's a good thing. They wanted to get their inventory down because when inventory is higher, you have to have more sales. You have to have more BOGOs, right? All that stuff. Inventory being lower means they have to have less of that, and they said they will have less of that. And anyways, from a technical standpoint, why did it stop there? So why wasn't it up 21%? Or why wasn't it only up 11%? Right? The technical people that look at this, the algorithms that weigh the amount of sellers or potential sellers in an area, mostly by using volume, you can see it clearer here because it's kind of obvious, but you go up to this point and you look at the greatest amount of time, months, of people that have that stock that bought and sold right in here. And where do we stop? Right about that equilibrium. And that's, unfortunately, that's not me and you making those decisions. That's the algorithms going, the probability of it going from here to here is less than the probability of it going from here to here. Therefore, we stop buying, or they stop buying. So that was kind of cool. TransUnion, this is one of the credit unions, right? Big credit people. They are going to be downsizing 200-300 jobs, something like that, just to get things started. 10% of their workforce. I'm sorry, I was thinking of somebody else. And what they're doing is they're just trying to make more profit, right? Which they would probably say is like, we're going to boost growth or something like that with profit. That is the goal. Advanced Auto Parts lowered their guidance, right? They missed on earnings and all that. It wasn't really that exciting when the earnings report, but they missed on guidance. They lowered it. They lowered the guidance. That's lower stock. That's the theme that we have going on. I just like to point that out. It says, I tell you ahead of time instead of say I told you so. TJ Maxx expects you to come spend a lot of money at their stores this holiday season, and they raised expectations because of it. Their actual wording, when you look through their transcripts, was, we lean into these holidays, like Halloween and such, and times where people spend money, Valentine's Day, the Taylor Swift tour, you're going to buy some clothes. That's a thing. So during the holidays here, they expect a lot of people to come traveling through their stores. They think they have the upper hand here to some of the other stores because they are a discount provider that actually has stuff that people seem to want to buy. Congratulations. That's the gist of their earnings report. And Goodyear Tire, they lose a CEO. This is the one, right? They lost a CEO, stepping down. And also, these guys have been making a push. If you work for them or something, you might know, but they're making a push to kind of become, that growth company again, where they can actually, compete with the other guys instead of just chomping along. And it's probably a good plan because currently they lose money, at least over the last 12 months. They lose money. Nobody likes to lose money. Tomorrow, you've got earnings from Walmart, which remember we talked about yesterday, kind of wraps things up for earnings season. However, it goes into retail stocks. So you're going to have Bath & Body Works, Macy's, Walmart, Williams-Sonoma. Beazer Homes is going to report too. Copart, The Gap, and Ross Stores to see if they think that they will also do as well as TJ Maxx over the holidays. Let's pop this out. I'll take your questions if you have any. You've got 4 or 5 Fed members speaking tomorrow, just as a heads up. So with all this economic data that's come out over the past couple days, I don't think they're taking questions. They're giving speeches, but we'll be looking at their speeches to see any distinction in interest rate decisions, right? Ta-da! Okay. Let's see what you got. To the moon. Yeah. Yeah. Danielle, you watching Microsoft today? The comment was, about Microsoft and being run up there, right? I always like to use the analogy of that where you say, if you run up a little hill, you can do it for a while, right? But if you run up a 45-degree incline hill, or heck, I'll even just go 15-degree incline on the old treadmill there, you're not doing it for a long time, right? And you're going to need to take quite a break afterwards. Better to be stepping down and jumping off the ledge. Yeah, it looks like they gave him a choice on that one, huh? Goodyear tires. That is true. I want to point out, before I'll move the questions out of the way there for you, but every sector but energy and utilities was up today too. And it wasn't that the whole market was just feeling it, like it was green across the screen, but just a little bit. No, it was real spotty out there. So even though you see consumer staples really strong, financials, communication services, yeah, they were all up a little bit, but it was a red and green sea of stocks, right? It wasn't really that clean. When the Fed speaks, the market drops. No. Oh, well, no, tomorrow's not Fed day. I think that's what you're asking. I'm just saying there are, actually, I'll give you the number. There are, and Jerome Powell's not one of them speaking. 1, 2, 3, 4 Fed presidents and or vice presidents speaking tomorrow. That's not going to cause problems there. Yeah. Williams-Sonoma barometer of rich people. Yeah. As far as the stuff they spend on cooking. Yeah. Nip that in the bud. My wife was all like, it's this garlic press. And oh my God, it's like brass or whatever. Like, you stop that. You want me to squish your garlic? I'll do it for you. And then you spend $80 on the thing that does the garlic. Sometimes you got to put your foot down. You know what I mean? What happened to VUG after hours? You may be getting just a bad quote or something there. Yeah, you're just getting a temporarily bad quote. That is all, I believe. One day you are from Texas, another you're from the Midwest. It's Spanish. Who are you? I'm from Texas, but living in Florida, and I happen to be Spanish. So that's allowable. The Midwest, I've never said I'm from the Midwest. I've been there. I have family in Iowa, but nope, not from there. Tomorrow I'll be Italian. I've been doing the Italian thing today, right? Hey, you guys got a leaderboard. I'm sorry, I forgot you. Let's go on over there and see what's going on.
Yeah. Your leaderboard, we got Dean K, Louis J, 3-time winner, Mark S in third. He's looming. He's ready to be a 4-time winner this year. Yeah. Could you imagine making $400 off of us this year? That would be crazy. Nikhil and Peter, that's your top 5 for today.
You have the stats on 3-time winners?
You remember somebody like him, you know? I believe his wife has also won a couple of times as well.
Oh,
as a household, you know.
I like that, actually, having the stats on. We've got a 3-time winner, Mark.
3-time winner, yep.
Honestly, I'm sort of surprised that there are, let's see, where's the Dow at? Based on this rally, I'm surprised there's as many people that close.
Yeah, a lot of optimistic people up there.
Wow. Okay. So you're still in the game. All right. If you want to play, jazzwealth.com/guess the Dow. And you are good there. No whammies. I love it. We had 1 week where there were whammies, right?
We had 1 week just a few weeks ago.
Just a few weeks ago. Everybody went over. So it didn't count.
Save some money.
Pandemonium's got the guess in there. I love it. Love it. All right. Well, I'll wrap it up there. You guys have a great rest of your evening. Tonight on Jazz After Dark, we're going to do What is Wealth to You? Sort of a touchy-feely, you know what I mean? Like,
it's a good one.
It was more of a rant, a little discussion there. I had kind of some cool discussions just to hang out with. Grab a drink, come hang out, and we'll talk about what is wealth to you. How do we do that? All right, enjoy the rest of your day or evening, and thanks for watching. Adios.